Today's tip is
How much money should you have in reserves when buying your first rental property? I mean, Tim, if and Carly, if you get to your second rental property or third or fourth, you really understand how much you need after you've had your first one. But we wanted to put this out there because some people get into this game and they fret. They panic a little bit. They're kind of stressed about the property getting rented. And we want to tell you, first off, when you buy a rental property, you don't have a mortgage your first month. So we actually here at Calgary Real Estate Wealth, we aim to actually get it rented before you even own the property, or better still, we actually hope that you can buy the property with tenants in it. That's even better because then you're not even worried about renting it out at that stage. But if you're buying your first rental property, you should accumulate a little reserve to start off with. So if you're refinancing or you've saved up cash, you should have a little money aside, especially in a soft rental market like it is right now. Calgary is really soft, so you have to have a little plan B before getting into this game.
yeah, and real estate investment is just like starting a business. So when you start a business, you've got to buy inventory, you've got to, pay your rent before you even get into your business space. There's a lot of upfront costs. Well, real estate, there's upfront costs as well. There's your down payment. That's the number one upfront cost you're going to have to pay. There's usually a property inspection cost you have to pay. There's legal fees. And again, if that property doesn't get rented in that very first month right after you take possession, you may have to carry it for 1 month. And in the grand scheme of things, is that much of anything?
No, it's not. We're going to get into that for sure. But what happens over time when you do own that rental property, and we always say this in the beginning, cash flow might be low, especially if you're house hacking and you're only putting 5% down. Cash flow could be really low, but then it will accumulate over time. And what we like to see is roughly 3 months of expenses. So we calculate that by calculating how much your mortgage is, how much the taxes are, how much your insurance is, and then we also throw in some vacancy. What do you calculate your
Normally, I
vacancy?
calculate 1 month every 2 years as vacancy when I do my analysis. But there's other aspects of real estate investing where you also need a contingency. Carly has done a flip now and then, and the odd time it doesn't sell, and you have to have a contingency plan. What's your contingency plan when your flips don't sell?
I mean, it depends on the property, but oftentimes my plan is to short-term rent it.
There you
So
go.
to be on Airbnb and make some money in the time that it's not selling.
Yeah. So you have to have a plan. I mean, at the end of the day, you don't want to be forced into a situation where you have to throw a tenant in there. That has always been the worst outcome, right? It just has. You're forced because you're running out of money, you have to throw it in there. So what we're trying to say is you have to have, when you have to calculate your deposit, you have to calculate 1 or 2 months vacancy or contingency in there with your deposit so you're not scrambling up front. And then as time goes on, you know what? Get to about 3 months. What does that look like on any rental property these days? It's roughly $9,000, $10,000, and it may take you 3 years to get there, right? The best thing is if you do rent it out before you own it, when we do that for clients, they're normally in front that first month. So that could be $3,000, $3,500. They're already in front. So that is the best scenario, but always go off worst case scenario. But as Tim was just saying, when you calculate this out over a 3 to 5 year period, we could tell you in the last 3 years, on average, Calgary prices have gone up $100,000. So if you are vacant for 1 month or 2 months out of that period, or even 3 months, it really doesn't, it really does. You even forget about it. You don't even worry about it. Don't panic. So we needed to put that out there because we know that it is taking a little bit longer for some people to rent out their properties. And there is no need for that to be even a worry. You got to just take that out of the equation and just move forward and understand what you're doing. If that is your first crew tip of the week, join us on YouTube, subscribe to our channel. You know what? There's some awesome tips there. You see what our clients are doing. And we actually interview people going through these problems. That's how these problems actually come to us because we feel the pain from our clients sometimes, and we want to put that out there so it actually helps you. And we went through a lot of pain ourselves with either flipping or renting or evicting people, and all of this knowledge helped you, the investor.